All right, guys, you know what time it is. It's Where I Was Right, Where I Was Wrong. And we got a special one for you, a bonus Where I Was Right. Christian, let's get it.
When Brad was right.
Yeah, when we were right.
We were right. Yeah.
Sam Adams, earnings per share, the estimates were $4.50. And I've been preaching to the choir. I mean, how long have I been telling you? Months, Brad. I'm like, Sam Adams is going to crush it. All indications of people that are talking to me in the industry are they're going to crush it. And man, I said $5 a share. You said they'd beat as well. Not only was I right, but it was monster. What, 650? Is that what you said?
Unbelievable. 651 was the actual earnings per share on estimates of 450. So they beat it by $2.
Let me brag for a second, because here's somebody asked, like, am I going to get excited about Zynga? I'm not going to get excited about Zynga. And you don't even know this. The reason why I was so excited, and we might post the video of the rant, the clip of the rant.
Yeah.
But the reason why I was so excited and so hype was because it's my wheelhouse. Hospitality is my wheelhouse. And I feel like the stakes are high. And it wasn't a popular thing to say. Like, I've been telling people, stop looking at restaurants, look at alcohol, beer, look at liquor and beer, look at those opportunities. And it just felt really good, because it was like, all right, I know my industry. I feel good about my industry. And I feel like the stakes are a little bit higher, because if I'm wrong, I look like an ass. So I was hype about that. And then it just went off, bro. Where's the stock at now?
Right now it's sitting at 16% from yesterday's close. It's up $1,064 after closing yesterday at around 980 something, 990 something. And it's just unbelievable move out of this thing. I mean, I thought they were going to beat. I just did not realize how much they were going to crush it. But you've been, to your point, you've been talking about this for quite some time. And even when it comes to Brown-Forman, which not a lot of people talk about. If you guys are interested in checking that out, go look up Brown-Forman. It's a liquor company in the same vein here. And really, it's growing so much for the same reasons that Sam Adams is as well, the Boston Beer Company. I guess we should probably be professional about that, but it is just an absolute monster, man. And kudos to you on that amazing win.
Yeah. And I'll double down on it. Sam Adams is a fall winter beer.
Yeah.
So this ain't it. This ain't over.
Right.
So
Q4 going to be awesome.
Quarter. Yep. Oktoberfest is one of their best beers.
Yeah.
They're going to crush it. So they're going to continue to do that. It goes to show you, like, again, we talk about just know an industry, know a stock. I feel really confident in the things that go on when it pertains to liquor and beer. And one of the things that I explained to the Chaos crew that a lot of people don't know is on-premise doesn't matter as much as on-premise. So on-premise is bars, restaurants. So most people probably would look at it and be like, oh, the bars and restaurants aren't open. That's not where they cut their teeth. That's icing on the cake.
Yeah.
Off-premise, which is liquor stores, that's where they make their money, and that's going up because people are at home. So if you didn't know the industry and how it works, you probably wouldn't have seen that.
Right. So either way, unbelievable move, man. Great job on that one. Next, we're going to get to, so if you guys aren't familiar with how this works, we go live on Sunday nights and we kind of give our predictions for the week ahead. And so these 5 stocks that we're going to be covering are those stocks that we talked about in Stock Watch Sunday last week. If you guys want to be a part of that, hang out during Stock Watch Sunday. We go live at 7:30 p.m. every single Sunday and kind of give you a prediction of what we think these particular stocks are going to do in the week ahead. And the first one that we got right was Fastly. And now this one doesn't relate to earnings, even though it's earnings season and we're super pumped about the earnings ahead, even coming into next week. But Fastly, you guys asked, what comes first? It goes back to $100 or it comes down to 75 or below 80. And we bet the under on this. And for sure, it came all the way down below 80, sitting around $75 a share right now. And I actually started scooping this up in the Chaos Crew portfolio. I think that Fastly's starting to get down to a level to where it actually makes sense to start buying it. Going to stay patient on it. Going to continue to work my way in on a position on Fastly, but I like it a lot down here. Makes a ton of sense, especially since they have earnings coming up next week as well.
We both said below 80. I said 75 on the dot.
Yeah.
Where are we at?
Right now on Fastly, I'm just going to check in. It is sitting at 76.10. It actually did come down to around 74. Actually below 74. Lows of 73.09 today. So got beat down pretty good.
Yeah, boy. Not that I'm happy the stock goes down, but we still feel good about it. And actually, I think these are good levels where I know you just got Fastly yesterday, and I'm thinking about making an entry on Fastly. So this may be a spot because we both believe, just because we felt it would go down doesn't mean we don't believe in the stock. We actually believe in the company.
Mm-hmm.
We just understand, again, people are kind of blowing up this TikTok thing, and we feel like it's a little bit overblown.
Yeah, I agree. And I think they actually still end up beating earnings regardless of what's going on with TikTok. So this might be a good one to kind of mess around with leading up into earnings. And yeah, we feel really strongly about Fastly now that it's come down to a reasonable level. The next one here.
Talk your talk, baby.
It's Snapchat, baby. It's Snapchat. So we've been talking about Snapchat since the beginning of September. It was the top stock to watch in September, leading all the way up to earnings this past week. And when the entire stock market was going down, Snapchat just kept going up. And I said on Sunday, my bold prediction was that it was actually going to become profitable. We were going to see positive numbers out of Snapchat. Lo and behold, the estimated earnings per share were at a loss of 5 cents. Fat Man Zoom said they were going to beat at a loss of 3 cents, which, you know, wasn't wrong. They did still beat, but I came in and predicted it was at 0.1, and lo and behold, it came down and it actually was at 0.1 cents per share. Snapchat is officially profitable, and it feels damn good.
That was a great call. That was your Sam Adams.
Yeah, it was. I lost it too. I lost it on Snapchat as well.
But here's why it's a bigger deal, is because they did not do well last earnings.
Yeah.
And it wasn't an easy thing to say they're going to be profitable. It wasn't an easy thing. Like, you went all in on it for the past 2 months. And so kudos to you, man. I mean, we felt good about it. It's about to be up 10% on the day, $42. Like, this is insane. This is insane.
It's absolutely incredible. And actually, it really kind of gives a precursor to what we could be expecting for the upcoming earnings this week with the bigger FANG and bigger social media platforms as well. We got Pinterest in the lineup. We got Facebook, Twitter. All of those should do well. If Snapchat is doing this well, I would imagine that they do well too. So next one's going to be Chipotle, and they actually crushed earnings as well as we expected. Actual earnings per share came in at 376. We predicted that, 340 was the estimate, came in at 376. Christian, you predicted 382. I said 363. We were both right on that. It hasn't really performed in the way that we thought it would, though. Regardless, we were right about the earnings, but it seems to be a running theme. And we actually even cautioned about this as well with what we saw with Domino's, that the costs incurred because of, you know, all the things they had to spend money on as far as protecting their employees and even customers from the Rona has costed them a lot of money. So it did affect their bottom line. It looks like Chipotle is running back up after coming back down into the $1,200 range. It's sitting at $13.29 right now. I think that Chipotle was still very much a buy here. And I would say scoop it up while you can.
Yeah, absolutely. And it was also not just COVID. It was COVID in the sense of delivery charges.
Yeah.
So when you think about the third-party companies, and we talked about this a while ago, a lot of people don't realize, like, the amount the grub hubs of the world takes is insane. The order ups, like, and so that eats into your profits big time. So that hurt them, but long term it looks really good. I feel like this is a good opportunity.
Yeah, I agree. Moving on to the next one here, we have Tractor Supply, and this is kind of one that I went off the wall on all the other popular earnings this week, and I kind of went on to something that nobody was talking about, and that was Tractor Supply. Their estimated earnings per share were at $1.35. Fat Man Zoom said $1.50. I said $1.47. They actually came in at $1.62. Very similar reaction to what Chipotle had, but I still think that TSCO is a buy here. They had incredible earnings, and their outlook is actually really good here as well. And I think right now the reaction to a lot of the earnings hasn't been all that great because the stock market has been down. In my opinion, I think these are going to be really good opportunities to grab on the dips here on companies that have obliterated earnings yet still sold off. Those are usually a textbook dip grabs, but and I think that this is just another example of that. And Tractor Supply, I think, is going to do really well going into the fourth quarter right now.
Yeah, I would agree. They did a great job on earnings, unlike our friends at Netflix.
Yes. So that is the one that we got wrong. Netflix actually came in. They had estimated earnings per share at $2.12. We were still very skeptical that they were going to beat, but we still ended up saying that they were going to beat. Christian said 222. I said 217. The actual earnings per share were $1.74. And there's a lot of things that are coming into play here. There's been a lot of controversy with Netflix and whether or not you want to chalk it up to this or not, but this has been the talk of them pretty much for the last two or 3 months, has been this cuties debacle. They've had other areas, sources of contention as far as Netflix is concerned. So we saw a drop off on their earnings and revenue this past quarter, and their subscriber rate has also dropped quite a bit as well.
Yeah, I think the warning signs have been there. The red flags have been there for this company. Does this kind of feel like Blockbuster, where which is the irony is like that. I don't know how much they're shifting. I don't know how much urgency they have. But if you look at the company, I had mentioned to you, if your company's so great, why are you promoting a co-CEO?
Yeah, that was the other thing that we kind of had questions about. It didn't make a whole lot of sense.
Yeah, so I think that I'm less optimistic about this stock, and I'm kind of I don't know what to say about it. I know you're big on content, and that's going to be important for it moving forward. But even then, I'd rather go Disney.
I mean, Disney's definitely going to be a contender here, moving in and taking up market space for sure. I don't know if maybe there's I think there's plenty of room for them both to live together. Yeah. But no, I would agree. I think that this is going to be a tumultuous time for Netflix if they can't somehow figure out either how to pivot or compete with the likes of Disney. It seems as if all the other streaming services that are out there, Disney seems to be gunning for them the fastest. I did not expect them to explode at the rate that they have been exploding at. And it's crazy to me to think that Disney Plus could actually be their main revenue driver over their parks, which is incredible because it's been such a mainstay for their revenue for so long, for so many decades. So this is definitely interesting. We'll see how this all develops. But yeah, tough stuff for Netflix. And there you have it. There is our where I was right, where I was wrong. And if you guys are watching this later, we're actually recording this for our Chaos Crew folks. So if you want to be a part of that and kind of get some of the behind the scenes stuff, make sure you're hitting the join button next to subscribe, and also get our daily watch list as well as access to our public portfolio. We would love to have you guys over there. Anything else you got for me, my man?
Rocket is going off. We were right on that one.
Let's freaking go. Let's freaking go. All right, guys, that's going to do it for us. Please like and subscribe. We would appreciate it. Make sure you're tuning in to Stock Watch Sunday at 7:30 p.m. Eastern time. Can't wait to see you there.